Good morning, YouTube. My name is Bennett Tyndall with TradingAnalysis.com, and this is our Elliott Wave Wednesday live stream. Good morning once again, YouTube. We do apologize for a little bit of a delay getting started there. Had some back-end issues, so we do apologize. But thanks again for joining us today. Wednesday, June 10th. We've got the Fed meeting this afternoon. Should be interesting. Likely a non-event from a rate change standpoint. More importantly, kind of focused on Jay Powell's press conference following the event. So that's 2 o'clock and 2:30 Eastern will be the press conference. Looks like we might be having some issues to YouTube. I think we're good. I think it's just YouTube's algorithm not keeping up with the bit rate of the stream. So without further ado, let's go ahead and bring in the team. Good morning, gentlemen. How are you guys doing today?
Good morning, Bennett.
Good morning.
Good morning, members. Bennett.
Yes, sir.
Chat is still disabled on that live stream.
You should just have to refresh it.
I did.
Really? Let's see here. Let's go. All right.
We want to be able to get our members' comments, cat calls, and
there you go.
Whatever.
So apparently the stream got marked as appropriate for kids, which disables the chat by default. So we fixed that real quick.
Yeah, it is appropriate for kids, but if you mark it that way, then it's restricted.
Then things don't go well.
Do you see the stream? I don't.
Yeah. Just refresh your page. There it is. All right.
Yep, we should be live.
Good morning, traders. There we go.
Good morning, Yermek. I hope I'm saying that correctly. Good morning, David. Glad to have you guys joining us today. Good morning, Craig.
All right.
All right, guys. So S&P futures up 0.75%. We just had, let's see, we're about, 45 minutes here, 30 minutes or so, 35 minutes to the market open. Again, we do have the FOMC this afternoon, 2 o'clock Eastern, 2:30 will be the press conference. That's where I'm going to be focusing the majority of my attention. Just kind of curious to see where the Fed stands following the pretty incredible move that we've seen off the lows. Obviously, a lot of Fed and Treasury support there. So without further ado, let's go ahead and jump into it, guys. We'll bring over the trusty Motive Wave platform, which is our preferred platform for Elliott Wave and really any charting analysis. So guys, this market just continues to press higher. I'm going to show you guys some interesting technicals here on the daily chart. So on the daily chart, as you guys know, we've been juggling a couple of higher degree interpretations. The really cool thing about both of these counts is off the March low. Both of them called for at least a 50% retracement of the decline that we saw, where in this case we've actually seen the NASDAQ 100 now press and set new all-time intraday and closing highs. The S&P is a stone's throw away. We've seen Russell 2000 small cap start picking up a little bit of momentum there, and we're certainly rather overextended. We talked about this a few weeks back when we had Amelia on, and the fact that short of a second round of COVID, the wave 4 low is very likely in. And taking you guys just really quickly to the weekly chart, we talked about this. If you caught the Elliott Wave Hub webinar event that I attended and was a guest speaker for, we talked about the guidelines associated with this fourth wave. And somebody pointed out the fact that, well, we've got this wave 2 back here, which we're counting as a flat. And in this particular case, we also have a wave 4 flat, and that doesn't support the guideline of alternation. But it's a guideline. At the end of the day, we also have the guideline that suggests corrections of the same degree will tend towards equality in either duration or magnitude or both. And as you can see, that fourth wave low came in right into what would be equality of waves 4 versus 2. So off the weekly down to the daily, a lot of people, I've had a lot of family members, in fact, a lot of family members and friends that wanted to get out of the market here. They're looking at the market here saying, I want to get back in. And this is a little bit tricky from a risk management standpoint, and then having the conviction to execute in this sort of overextension, which is evident on not only our leading sectors charts, but market internals and Forex, it certainly makes it a little difficult to have the conviction. And I was chatting with another Elliott Wave practitioner who's got 20 plus years on Wall Street, and he was saying that you can always find more trades. Finding more trading capital is a little more difficult. So having patience here, I think, is key, and I think you guys need to remember that this market is very different than markets that we've been in before. So the event that led to the sell-off and the level of Fed intervention that we've seen in this recovery effort is certainly unique and in a new environment. So where do we go from here? What do we see, and what could we be expecting in the near term? Well, this is our current primary count of the S&P off the March 23rd lows, which really suggests that we are coming to the end of a 5-wave completion. We do have a bullish alternate, which is pretty optimistic in that we don't see the support of this count from all of the leading sectors, the market internals, so forth and so on. So getting you guys off of the S&P, let's take a look at some of the other charts. Let's take a look at some of the sectors of the S&P and the wave counts that are associated there. So I'd say around a month ago, we brought in the communication sector ETF, the XLC, which was a spin-off of tech back in 2018. And typically speaking, when you have a new instrument, it's a little difficult to actually count a nice clear Elliott Wave pattern that you can rely upon for projections.
Don't have enough history in the chart, in the price chart, so
Exactly.
It's difficult to...
Exactly. And in this case, July 2018 to March of 2020, I think we now have some clarity. And the clarity that I see here is this initial move lower, 3 waves back. Notice this nice 1-2-7-2 of B versus A, a very common target when dealing with these flats where you're seeing the B wave exceed the A wave origin. And then we have this C wave mode of impulsive decline right into that 138.2. On the daily, from there, we can count a nice 5-wave sequence with an extended 3rd wave that met the 1618 objective, or just shy of. We then have a 4th wave, which squares up to wave 2. And we're now right into equality of waves 5 and 1, which is very common when you have that extended 3rd. Communication sector makes up 10% of the S&P 500. The XLY, consumer discretionary, another kind of key bull market growth sector, is showing us a very similar count in that off of the September 2018 high, we have 3 down, 3 waves back into just over that 1-2-7-2, but shy of a 618 of C versus A. So the substructure fib ratios are very appropriate. And then we have that C wave push right into that 1-2-7-2 of C versus B in this particular instance. From there, we can count up in 1, down in 2, spot on 50% retracement, push higher in 3, 3-wave retracement in wave 4. Within this wave 4, notice we have the guideline of alternation playing out. We have a directional wave 2. We have a more sideways drawn out 4th wave. Within the 4th wave, it's kind of a measured move, equality of corrective waves C versus A. So for those of you who don't have motive wave, you can take your fib projection tool or extension tool. I've seen it labeled differently depending on the charting software you're using. And you essentially measure that A wave and you project it from your B wave retracement. So in this case, we're also kind of close to that upside target. Now, let's do this and let's switch. Yes.
Let me have you throw... You're stealing all my thunder, but that's fine.
Man.
Let me let you throw XLB, the materials sector, in that same mix with communications, discretionary, and now look at materials, and I'll explain later. Let's take a look at that one. Don't think we have a wave count built for it.
We don't have a wave count built for it, but let's focus in on this right here off of Jan of 2018. I'd call that, we're going to go complex here.
I just want you to note the similarity in the recovery phase from the March 23rd bottoms in all three of those sectors.
You know what I see here? I see this as our first largest retracement, and I bet if I get off the daily, I can pull a nice 5-wave structure. We've got an extended third wave here. Oops. Come on, motive wave. Right into a 200% 3v1. So we're into our 61.8% of 1 plus 3. I like that. Let's get off the daily. Let's get to a 195. A quick F5 will snap all of those wave labels right back to where they belong, and that's a pretty straightforward count if I've ever seen one.
Question is, again, is that wave 5 finished or just a little bit more?
I think we're in wave 4 of that wave 5 with this wave 4 squaring up to this wave 2 right here. So good call on that. And I see futures action also lines up with that. So we can bring that in a nice 1, 2, 3, 4. And we've got a nice little 5-wave move here as well. Good catch, good catch. Let's do something on the weekly, and let's go to a line closing basis. And look at that. We can pull that as a 4th wave on our higher degree weekly count. And then I believe we're in the orthodox range, but we're not. Well, on a closing basis, it wasn't an invalidation. So we're going to go ahead and put that there. You know, I'd almost, let's see here. What's this retracement? That's a 32% retracement. Here in materials, we've got a 21. We could also bring this and move wave 1 back here with, that's a little bit tricky in the 3rd wave. But more importantly, I think your best instance here is to focus on the pattern that Terry pointed out off that January 2018, and more importantly, the pattern development off the lows that we're seeing to kind of support that 5th wave high. So
and the reason when I show my sector rotation, the reason I wanted those 3 specifically is because generally those 3 are rising higher in a northeasterly direction, and XLC and XLY are in the leading quadrant right now. Materials is about to move in, so materials has got a lower relative strength ratio than the other 2, but its heading is behaving very similar. So we could be seeing these 3 sectors move into leadership position solidly over the next couple of weeks, and I'll get to that when we flip over. So I'm sorry to interrupt you there, but I didn't want to pass that up since you stole a little bit of my thunder. I figured I'd steal a little bit of your time. So
that was a perfect segue, and now we've got wave counts to go along with the sector rotation. So I think it works well. And one last chart I have for you guys before we carry on to see what the rest of the team has to say is that of the chart of the, in this case, we're inverting our put-call ratio, so we're looking at it as more of a call-put ratio. And,
hey, Bennett, can you adjust the audio? They say I'm much louder than you.
Yeah, I can make that happen. Let's see, which do I want to tackle this on a software level or a hardware level? We're not peaking here. Let me give myself a little additional gain here. Check, test. It's going to take them about 30 seconds or so to pick up on that audio adjustment.
That's better.
Oh, okay, I see. I had you gained up to 6 dB, so I had 6 dB of gain on top of you. Okay, that should help.
All right, tone me down a little bit.
So in this case, we're looking at, instead of the put-call ratio, we're looking at the call-put ratio. And oftentimes you will see extremes in call buying or extremes in put buying as contrarian indicators and associated with market reversals. So for instance, we have this move into the December of 2018 low, and the market was panicking and selling off, and everybody expected that to be the start of a new 5-wave impulsive structure to the downside. Here we had an extreme in put buying. Notice that was kind of the lower boundary of this trend channel that we've been reviewing over the past couple of weeks. This is where things kind of get interesting in the call buying aspect, in that we set this high in February, we consolidate in the market pushes to a new high where our call buying set a lower high, okay, kind of a bearish divergence here as the market pushed lower. We're now seeing a new extreme on the daily 9-period moving average for the call put ratio. So extreme in call buying that exceeded that of what we saw back in February.
So you inverted, reminder that you inverted that put to call ratio. Normally people see it upside down, but if you invert it, now you can see, you see the general shape of the trend. And we're pretty extended here, aren't we, to the downside on the put to call volume.
So when we take all that into consideration, it just makes it difficult to say we're in a 1-2, 1-2, 1-2 market and we're just going to explode in this verticality for the remainder of days. So Terry, without further ado, let's go ahead and transition, if you are ready, to some sector rotation, and we'll bring that discussion on those 3 sectors full circle. The screen is yours.
Give me the screen. There we go.
Yes, sir.
This is what I was talking about. This is this on the weekly rotation here. So you can see here is communications, here is discretionary, and here is materials. And so you can see over the past 5 bars here, 4 bars in a month, 4 or 5, and you can see the the general trend has been steadily northeasterly in all 3 of these. Communications not quite as dramatic, increasing in momentum, but still pushing to the right, which means it's increasing in terms of relative strength. Another thing interesting to note is, technology and healthcare had been neck and neck, and what had I been telling you guys? Look dramatically now, healthcare, it's number 2 now in terms of relative strength, but it still continues to lose momentum rapidly compared to XLK. I do want to switch over here to the daily rotation. We don't use this a lot because it represents very short-term movement. I'm going to go ahead and make that 5 bars. This is the last 5 trading days, and I can animate that for you. What I want you guys to take note of is this hook right here. So you see the hook here. We had financials, industrials, and real estate, everybody moving higher. Energy still moving higher, but this bend over says now they're starting to lose momentum. So financials, industrials, real estate, I would expect all of those stocks are now stalling in their price movement higher. On the daily participation, they are still much higher in terms of relative strength than the overall S&P. And healthcare is the one that's down here in the lagging quadrant. Although it is starting to gain a bit of momentum, it is much lower in terms of relative strength. Now, technology is sitting down here. Technology has been taking a back seat for, the last couple of weeks, while we saw a lot of these other sectors that were really beaten down recover rapidly. Technology just kind of sat there and just kind of, actually pushed itself down into the lagging quadrant a bit. But what I find interesting now is that it actually has hooked north towards the northwest, and I would expect to see a continuation of that pattern, and then eventually we'll see technology rotate back into favor. Let me go back to our weekly, because this is much more representative of swing trading time frames. Day trading would use the daily rotation. But energy, again, I noted that energy in the daily, energy was still pushing higher. So energy was obviously the most beaten down even before the pandemic began. Energy is still inside improving. It's got a nice northeasterly heading, and it is rapidly recovering. Crude oil is still trading well. I'll put a little Elliott Wave markers, looks like here on, this is not even the chart that I wanted, Splunk, whatever, let's get this out of the way here. This was something I was looking at. Let's bring in XLC. This should be XLC. No, this is a filter I was doing. I'm getting ahead of myself. I was playing the scratch yard on my XLC charts here. This is your communication sector compared to the S&P. And there really is not a lot of participation here in the leadership. Really sort this by relative strength ratio. Google and the XLC itself and Twitter and Facebook are really the only three stocks that are inside the leading quadrant. Most of the stuff in the communication sector has been drawing itself down, but a lot of the broadcast companies now are rising high in terms of momentum. So you can kind of see this mixed bag of rotation here is kind of why communication sector is not dramatically moving higher in terms of both relative strength and momentum here. It's kind of stalled. Now let's switch over and take a look at the consumer discretionary. So in consumer discretionary, I have much more broader participation of elevated momentum and a little bit of relative strength ratio. Our top leaders, though, have most recently been losing relative strength and momentum, although not proportionately the same. So it's not like a straight 45-degree angle, which means that they would be losing at the same time. It's more vertical, just simply a drop in momentum. Amazon, Dollar General, although they are borderline moving into the weakening quadrant, they're still retaining very high relative strength, as well as eBay. And look at a new leader here, Lowe's. So Bennett, put this on your list. We want to add to a focus list for maybe next week. Lowe's and O'Reilly, and maybe even Yum Brands. Who doesn't like Taco Bell, right? Yo quiero Taco Bell, remember? I like that. But yeah, these guys, they haven't fully recovered. Here's a weekly price chart. And actually, Yum Brands had its peak back here in 2019. And then this was our most recent market drop. So it had already come off its all-time high. We've retraced about 78%, it looks like, of the fall here. But I like what I'm seeing here. I like seeing continued strength, continued momentum, and growth in those guys. All right, let's jump over. We want to take a look at the materials sector. I don't look at this sector very much, but I am seeing a lot of, and I think a lot of this is these chemical companies that are related to the energy industry. They're not in the energy group, but Lyondell, Basell, Dow, and DuPont, de Nemours, PPG. A lot of these guys have been beaten down, and they are now also growing quite rapidly, up and coming. They're still in the inside improving quadrant. Not too many in the leading quadrant. Actually, Newmont Mining's got this huge 125 relative strength ratio. Sort these by that. So we've got Newmont, Ecolabs, International Flavors and Fragrances. Air Products, that's a chemical company. They make oxygen, nitrogen, argon for the energy industry. But yeah, Newmont is just really the outstanding thing here, and I think that's mostly due to the gold. And Alex is going to cover gold in his review. I know everybody's always interested in that. I was taking a look at Gold Miners Index yesterday for some of our clients, and some interesting things in there. So that's what I see going on in those three sectors. What is causing what I'm seeing is strong movement higher. Here is energy. Let's go ahead and open energy up. Energy, you know, all these shale producers that have been down here in this lagging quadrant, none of them are still have moved over into the leading quadrant just yet. Everybody's got this huge upthrust in momentum and potentials with Williams Brothers out in the lead, and then followed by Chevron Corporation, Hess, Phillips 66, and then etc. So a lot of momentum gain here. We'll see once these things turn sideways, that'll be a time period where momentum stalls, but relative strength should start to increase. So looking forward to that. One more thing, biotechs. We talked about this. One of my clients had specifically asked me to put the IBB top 20 list together a few weeks ago, and we did that. Biotechs have been, you know, pushing us higher through most of this pandemic, but now they're getting tired and they're starting to see some decay. So I've got very few in the lagging and improving quadrant, mostly all in the lead and weakening quadrant. But the ones that have been seriously in the lead in the past, Regeneron, Gilead, and this is Biogen, they've basically are losing their favor. Regeneron's still retaining a high relative strength ratio, and even Moderna, which has been insanely way out here to the high, is just been losing momentum, but essentially it's made such a huge run up. This is a weekly price chart. I'm going to take it down to the daily price time here, but you know, you can definitely see there's some kind of either potentially triangulation going on in this correction that it had from the May 18th high down to May 27th, and then it's trying to do a period of consolidation. But you know, here's the March 23rd market lows, and look at this stock. This stock has just risen, you know, to meteoric heights during this pandemic. So that's about all I've got today, guys. I'm going to pass it back to you, Bennett.
Very good. Much appreciated, Terry. mRNA had a pretty nice move on that initial headline, and then certainly some profit taking there. But all righty, let's transition. Alex, sir, are you ready to bring us up to speed?
Sure.
Yeah, let's just get you a presenter here. Let's see. There we go. Got about 11 minutes here to the open. And the screen is yours when you're ready. All right.
Yeah,
Take it
okay,
away,
so as we have been talking for the last few sessions, looking for this upside on euro, so finally we got it, and now we are kind of facing a possibility that this euro uprise might even continue higher. So looking from the higher time frame, we can count 5 waves up here, and there is a wave A, B, and expanding ending diagonal in C. We have stopped in this area around 786 and C equal A. So from the latest lows, this starts to look pretty impulsive. So looking also at the dollar index, which we have been bearish for some time already, this I think it's gonna materialize in a 1-2-1-2, and I think that the first wave, orange wave 1, is soon going to be end, and we're going to see a short pullback, because usually When you have this type of a 1-2-1-2 wave, first wave 2 might be a kind of a skewed and has hesitations. As it was here, depends how long the trend it was on the downside. Usually, sometimes the wave 2, most of the times wave 2 are sharp, but this here you see a very big hesitation on the upside, and then you see a impulsive move. So this wave 2, which will consist of probably as well in 3 waves, I don't expect to be long, because the second wave in this type of a progression usually is very swift and doesn't retrace much. So I will look here for a 38.2% retracement and then a continuation on the upside in the forming of the possible wave 3 here on euro dollar. So we are above 786 this move prior to prior move down, 786 of the Fib retracement. So 127 is the next one, which is around 116. So I'm gonna start to look even more kind of a bullish outlook, not just on euro, but as I said the last few times, on several currencies. Pound is also very bullish according to our count, and we have been looking this with our members. So I'm also expecting a bullish development there. Aussie is also very bullish. So many of these charts imply that dollar should start moving lower pretty swiftly in the next period. So also, even we have pinpointed this Euro Swiss for our members. We are expecting a continuation on the uptrend on this one as well. It has been a long move down, which was kept around these trend lines, and there is only 3 waves up after the lows. So we are gonna continue to look higher in these risk-on currencies, and fundamentally there is several layers to this, because Fed announced that they are thinking possibly on the yield curve control, which is something completely of a different kind than a quantitative easing, because it's focused more on the shorter end of the curve. So probably they will peg shorter interest rates, which will also add on to a weaker dollar, I think, in the future. So we are starting now to form a more maybe kind of a midterm, a little bit more inflationary outlook of the markets, and definitely some of the wave counts we are seeing on several asset classes points to this possible scenario. Gold as well. We are still going to continue to look higher in gold. I'm expecting this pullback because I think this wave 2 is still not finished. This is a very small correction in my opinion. So I will expect at least one more push down while the dollar index starts to retrace this wave 1 of the wave 3. So on a smaller time frame, I still don't think this is done. Probably might be some ending diagonal or some other complex structure to the downside, but I'm still going to look a little bit lower on gold, and then I'm going to expect a further move on the upside on gold for now, as long as we keep these levels of around 1,600 and 1,451. And also silver looks pretty bullish to me. I think even on silver we are possibly witnessing 1-2-1-2 formation for this possible flat. And shorter time frame, if you can see, we have a nice 5-wave sequence on the upside, small pullback, and then another 5-wave sequence. So I guess this corresponds very well with gold, that we are already start progressing in the orange wave 3 after a short pullback. As cryptos are in question, we are expecting the similar pullback in cryptos because the dollar will get some stronger, but cryptos and dollar are not so correlated. As one of our members asked, we compared the charts, and most of the time both of them went upward. I think the Bitcoin is more correlated with the liquidity into the system, and if you want a little bit of the S&P in there. So we are short on Bitcoin. We entered at 9,736 with a stop loss above 10,000. We are waiting a confirmation to move the stop loss to break even. And if we are going to see a trust higher, we will be exiting our position a little bit before the stop loss, but still waiting the resolution. Here on the larger time frame, I'm looking still for a possible 1-2. So again, 1-2 in the orange wave 2, or we are looking just simply on a fully developed triangle, because both measurements in this wave D or a wave 1 kind of corresponds either in a wave 2 or in a wave 4 E, and then completed wave 4. So it really doesn't matter which one of this is actually playing out. We are expecting a move upside on the Bitcoin after this correction is finished. So that's a short overview. If you like to join us and to see some other things we do, other markets in currency field or a crypto field, we cover, I don't know, I think 14, 15, 20 of them in our weekly webinars for our members, and we trade them actively. So if you want to join us, please, you're welcome.
Very good.
All
Much
right,
appreciated,
Alex.
Alex. Thank you, sir. All right, we are about 2 minutes away from the open. We had a request to take a quick peek at the Tesla chart. So let's go ahead and take a quick look at that, and then we'll wrap it up. We'll let you guys get ready for the bell here. So we're coming out of a pretty serious correction off of that ridiculous extreme near 991 a share. This stock traveled from June of 2019 at the 175, 178 handle all the way up to 991 in what could be a third wave position. Now, notice the retracement that we saw here. Regardless of our wave labels, we had about just between a 50 and 61.8% retracement in kind of a three-wave fashion. From there, we can count another 1-2 with an extended third, nice little acceleration gap. This wave 4 was rather short, but it did demonstrate equality to wave 2. It was directional. This was a little more sideways given that B wave. And now we're pressing into not only a 61.8% extension of waves 1 and 3 here, but we are approaching that 1,000 psychological price point. So unless this turns into the alternative, which is also pretty incredible, let me go ahead and bring out markers here. Unless this is just a massive 1-2, which would be pretty remarkable, I do think we're going to see a little bit of consolidation off that $1,000 level. So we'll keep our eyes on Tesla. Tesla's a very interesting chart with many different analysts' price targets, anywhere from $50 to $6,000. So anyways, guys, there's the market bell. Hey, if you guys enjoyed the content, be sure to give it a thumbs up. It lets the YouTube algorithm know that you enjoy it. Subscribe if you want to be notified when we are live again, and of course turn on notifications. You can check us out at TradingAnalysis.com. Stock options, Forex and cryptocurrencies. We hold weekly member webinars in all 3 of our services. We have daily strategy video updates, and hope to see you guys there if you're interested. So, guys, have a good one. Be safe. Stay healthy, and we'll see you guys next week. Terry, Alex, as always.
Hey, guys.
Bye-bye, guys. See you next week.
Have a good one. Take care, YouTube. See you then.
Thanks a lot.